Now, another budgetary stalemate is brewing in Washington just months after Congress narrowly avoided going over the fiscal cliff. If no progress is made, deep across-the-board spending cuts will kick in this week, although some are accusing the White House now of fear-mongering.
The White House has already warned of meat shortages and lost jobs. Now, greater risk of terrorist attack.
I don't think we can maintain the same level of security at all places around the country.
The president invited the nation's governors to lunch at the White House Monday, warning of cuts that will hurt their states.
The longer these cuts are in place, the bigger the impact will become.
The White House has put together a state-by-state report on how the cuts will hurt the disadvantaged. In Louisiana, for example, more than 1,700 children will not receive vaccinations. 600 will lose access to child care. But just minutes after lunch with the president, Louisiana's Republican governor accused him of fear-mongering.
He's trying to scare the American people. He's trying to distort the impacts.
Are you saying that these things won't happen if these cuts happen?
No,
I'm
saying that the president needs to show leadership and tell Congress how he can cut $85 billion without cutting these critical services.
We put that directly to the Secretary of Homeland Security.
Governor Jindal says that the administration is scaring people. He says the president is scaring people. Is that just wrong?
If people are scared, it's because the full impact of this is finally being made evident.
The president is traveling to Newport News, Virginia to highlight how uncertainty about the defense cuts has already put some 5,000 shipbuilding jobs on the line. The idea is to put pressure on Republicans, but one top Republican leader in Congress has already responded saying, "Mr. President, this is no time for a roadshow."
Meanwhile, US President Barack Obama outlined dire consequences of forced spending cuts, addressing a group of workers in the state of Virginia.
In a few days, Congress might allow a series of immediate, painful, arbitrary budget cuts to take place, known in Washington as the sequester. Now, that's a pretty bad name, sequester. But the effects are even worse than the name. So these cuts are wrong. They're not smart. They're not fair. They're a self-inflicted wound that doesn't have to happen. And I told him, I said, I've run my last election. Michelle's very happy about that. I'm not interested in spin. I'm not interested in playing a blame game. At this point, all I'm interested in is just solving problems.
I just want to bring you across some breaking news. You can see at the bottom of your screen coming from Standard & Poor's, the global credit ratings agency, in regards to Australia's AAA credit rating. The company saying that a number of possible scenarios may indeed put downward pressure on Australia's sovereign rating. As I mentioned, that's AAA, one of the few AAA rated around the world. It says, however, the risks appear to be largely mitigated, as highlighted in a report published today. In regards to those risks, it says Australia is not without its vulnerabilities. The economy holds a large amount of offshore debt. Households retain substantial debt because of high house prices, and its banks are reliant on foreign investor funding. However, it goes on to say, although these weaknesses may pressure the sovereign ratings in a downward scenario, they appear to be largely mitigated for now. So it seems that they are highlighting some much discussed vulnerabilities, perceived vulnerabilities in the Australian economy. However, at the moment, they say those risks, for now at least, seem to be mitigated. We might get a little bit more on that in just a moment. Before we do, we mentioned before Ben Bernanke, Federal Reserve Chairman, is playing down concerns over the end of easing, suggesting in his Senate testimony overnight that the Fed will not cut QE3 short. But he's also warning Congress that the sequester spending cuts due to kick in this Friday would place a significant additional burden on economic recovery in the US. Mr. Bernanke said data from the Congressional Budget Office projects that the cuts would reduce potential economic growth by 0.6%.
It's true that just canceling the sequester would not solve the overall problem, which is the long-term fiscal issue. So if you cut the sequester, delay it, however you modify it, you ought to compensate for that with in my recommendation, you should have to compensate for that by looking at measures that address the longer-term fiscal concerns, which is what the CBO shows to be the point where the debt really begins to explode. And people disagree on the second point, but again, what I've suggested today is trying to make some trade-off between the effects on the near-term recovery and aligning the policy with the timing. The timing says that you've made progress on the very near term as far as the budget is concerned. Where the problem still remains unaddressed is in the longer term. And so it doesn't quite match to be doing tough policies today when the real problem is a somewhat longer term problem.
Sure.
That's what I'm trying to suggest.
Let's bring in Mark Todd from FIIG Securities in Sydney. Mark, great to have you on board. I want to talk about the Banank in just a minute. Before we do, though, wanted to get your reaction. I imagine you haven't seen it, so I'll just read it to you. Standard & Poor's, a statement in regards to Australia's AAA credit rating. It says that Australia does have some vulnerabilities, some risks, and I'll read them out to you. It's cited the economy holding a large amount of offshore debts. Households retain substantial debt because of how high house prices, and Australian banks reliant on foreign investor funding. It does, however, go on to say that at the moment those risks are somewhat mitigated. They're not new risks. Your thoughts to Standard & Poor's again highlighting them?
I think some of the things with Standard & Poor's and the like is they probably don't, in their own mind, like to have a AAA credit rating out there. And I know that seems to be ironic, but the point is it's such a pristine credit rating they'd be looking to say that in post-GFC environments it's very hard to sustain that. So I think it's a credit to Australia to have done that, and they would always look to try and modify the AAA around expected stresses in the markets. And the stresses that they've spoken about are actually credits to the Australian economy in that there's offshore activity. They've got a lot of offshore interest, and they've got a lot of offshore borrowings and the like. And you were a small economy by size of people, yet we've got such a broad fit. And so if you have people buying all our bank credits that they've issued billions of dollars this year already, the thing to remember about the bank credit issue that all these offshore investors buy it is because it's at such a good price to the bank. There are a lot of people here locally who would like to buy bank credit but at higher spreads. So if the bank's issuing at 57 basis points over the cash rate for 3 years, there's no one here in Australia who wants to invest at that level because there are better alternatives. So that's a consequence of the good credit that the offshore investors are looking to buy. So I think the government would take some solace out of it. They probably couldn't sell the fact that they've got it, but they should take some solace out of the fact that it still sustains that AAA credit rating. They're just pointing to dark clouds that may eventually lead to some problems around the savings rate. But I would note that the savings rate in Australia has continued to pick up from 1990 levels of minus 5% to now positive 10%.
Well,
so,
talking of those dark clouds, Standard & Poor's goes on to say what it describes as several plausible, albeit unlikely, scenarios that could expose those vulnerabilities that we made mention of before. It says a sudden shift in foreign investor sentiment or a sharp slowdown in China's economic growth, coupled with a vulnerable household sector, that could indeed worsen Australia's economy and fiscal position significantly. Once again, I mean, these aren't new, as they say, plausible, albeit unlikely scenarios.
That's right. I think if you look at the investor shift, of course, if they started to not buy Australian assets because there's been an investor shift, your first question is, where would they look to go? Would they look to go and buy Italian debt? Would they look to go and buy any European debt? Would they look to buy local debt in the United States at 2%? Where would they actually look to go that would then create that sudden shift? So when you write that sentence and then you sit back and look at it, it's quite illogical. It doesn't really make an awful lot of sense because investors themselves want to spread their risk. If they've already got the risk within the United States, they like to buy Australian assets. It's just a credit logic, if you like. In terms of the China slowdown, it would be clear to say that if China and then the domino effect of the rest of Asia suffered a slowdown, so if China starts and the rest of the Asia followed, then everyone would be subject to that problem. So the AA credits go to AA minus, the AAAs go to AAA minus, if you see what I mean. Because China is such a strong player in global markets, there's no other drivers to take over where China would weaken. Europe won't do it in the next 10 years. North America, we can talk about Bernanke's problems, but North America doesn't look likely to take it over in lieu of what China's looking to do.
It goes on to say, our base case is that Australia's economic growth will remain close to trend over coming years. Australia's wealthy and open economy withstood the global financial crisis better than most other developed economies, and we expect public debt to peak at a low level before gradually declining. It seems to me that it's almost we're giving them a AAA credit rating. Here's some potential downside risk, but we don't actually think it's going to happen. We're just sort of covering our own asses.
It's like when you're at uni and you have to write 1,000 words and you get to the first 500 and you think, well, we are not going to...
This isn't going anywhere.
It's not happening. Everyone knows what's happening. It's got GDP growth that everyone else would love to have. It's got debt levels that everyone would love to have. It's got an outward-looking economy that everyone would love to have. It's got a mobile workforce. It's got an educated workforce. It's got all the things that you want to have in an economy. So you've still got another 500 words. So you're right, well, what if this happened? And what if this happened? And what if, it's just not really looking very likely, if possible.
I want to shift focus. Wanted to get your thoughts on the Fed Chairman Ben Bernanke, his testimony early this morning. A couple of things very much obviously coming to the fore. One, defending the bond purchasing program that the Fed has undertaken and seemingly putting at ease any investors' concerns they might have had that it was coming to a sudden stop. That, and once again, given a bit of a rap over the knuckles to Congress about getting their house in order.
Yeah, I think, Bernanke's the one that's providing the political will. I think Obama's trying, but he's somewhat falling on deaf ears now because the Republicans have moved to the position where they're just not going to listen. They don't want to be seduced by his words, and so they refuse to even countenance a conversation. So the bonus says you've had your tax hikes. If you talk about any sort of change in behaviour, the Republicans just aren't prepared to listen. And so here's Bernanke saying, we have a program that's working, we have an economy that's starting to improve and show meaningful improvement. We need to get unemployment down from high sixes. You need to let me keep at work doing what I'm doing, and you need to do your job, which is to create a legislative environment that the rest of the economy can work with. At this point in time, the Republicans, and to a lesser extent the Democrats, have moved into a position where I think they're looking at it as a social experiment. And so when you see Harry Reid come out and saying these cuts will take place, I think the Republicans want to see two things. One, they want to see what it does to the economy. They are genuinely curious. They want to try and break it back and say, this is for your own good. You're going to take your medicine now. They want to see what that does. And they also want to see how it plays out in the politics of their voters' minds. And if they can pivot away from Obama and seem to be Republican-like in their performance, then it might be good beneficiary for them. And again, I think they're still curious. I think they really believe in this. This is all about dogma. I
think that's got to be one of the keys, doesn't it? That if you get a situation where you get these spending cuts kicking, this sequester, as it's been termed, and when you do see some 1.5% potentially taken out of GDP growth, suddenly their political position could be strengthened by an economy that's suddenly failing. On the other side of that, of course, Obama has a position where say, well, the reason we're in this position is because you failed to come to some sort of an agreement. Sure, but
I think in their polling they'd have things that would say in the voters' minds, they'd like politicians that were honest and they stood up for their convictions.
Yeah.
Now, the fact that your conviction means that the voter lost his job, I think is missed somewhere, if you see what I mean. But they want to be conviction politicians. They really believe in, so therefore they're going to do it. And that becomes the problem for the Democrats. How do you get people to cross the aisle when there's no one left that's a moderate Republican? It's very hard to then have a conversation with somebody who's a dogmatic person doesn't really want to listen. They don't want to be won over. They even when you've won the argument, they will just walk away. They don't want to have that argument achieved. And so that makes it quite tricky to create a political framework where you both walk out and say, well, we got something from the experience. We both did well. That's not likely to happen in this environment. So I think if I could look into a crystal ball, they'll go with the cuts. I think Obama will come out and show that he really is a consummate politician, and he will take them to task. We'll soon see. Look, Mark, got to leave it there. Great as always to talk. Thanks a lot. Take care. Look, 29 minutes past the hour, head on trading.